taking some time off. Let's take a look at the markets and see if anything interesting has happened while I was away, and also try to see if there's anything interesting to trade. Before we start, though, as always, I need to stress that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. As well, I'm going to share with you guys my view on the market, but it doesn't necessarily mean that you should go out and do exactly everything I say here. It's really important that you sort of have a basic strategy, at least, where you sort of know where you would like to enter and exit. What I try to do here, of course, is try to educate you on that. And a lot of people that come here, they have their own systems, and then they just compare levels, and my view, to sort of potentially improve their chances of being right on the market. Okay, let's begin, and we're gonna begin with just the euro. So this little Andrew's pitchfork has been working out really, really good. I'm a bit amazed because I actually haven't used the pitchforks before, but what I did is that I put a bunch of pitchforks on a bunch of different markets and did what we call forward testing, and that is when you actually sort of do your analysis, and then you try to sort of see how things would play out. And I had a lot of issues with the euro dollar literally since October last year. Sorry, well, not since October last year, but since August, really. Like, really, since here, like I shorted a bit here actually. In August 2018, I shorted a bit, did a bit of money on that, but then the market swung all the way back up. And then you had a few declines since then, and I think I probably traded maybe 4 times really since probably August, September last year. That's how often I'm trading this, because it's sort of riddled with a bunch of breakouts, false breakouts, that is. But putting on this little Andrew's pitchfork seems to be very helpful in trying to understand the euro, because the price bounces off this green line, and sometimes it tries to reach all the way up to the red line, but it's mostly contained within these two levels here. Doesn't mean that this is going to continue forever. It will break, and we will need to redraw it. But at least, if one were to put this on here, because with the help of the August 14th low and 2018 and the September high here in last year, you could have successfully navigated the euro dollar very well here, pretty much since then. And this was really good in a way that it sort of really held to confirm. So the price bounced very nicely from here. And remember, we're trading up here, and I said we probably could roll over, at least that would suggest us to tell, and then maybe bounce from here. Now, I wouldn't be buying a downtrend. I try to avoid that, even though this suggests we definitely should. But yeah. So going forward here, so what does the pitchfork tell us today? And what does sort of traditional support and resistance tell us today? Well, the pitchforks, to begin with, is because we reached that median line, is telling us we probably should look to sell around the median line. And I think we can just use this as our stop. That will be the 1167 level. That will be something. As well, if we just get rid of all that fancy stuff, you can see how you have a low here from the July 31st low, and then you have a low here, which is the August 23rd low. And when you take out lows like these ones, the market will usually try to go up and try to move down from these levels. And here as well, you have that high here, which acts like resistance. Now, as for the pitchfork, it tells us we could probably target something like the low here at 109.21. So that's what we're going to be doing. And even if I didn't have that, I would say still target that low. So things are looking like the system right now, or the pitchfork, is marrying. It's going really well hand in hand with my normal system I've been using for years. So I'm pretty much bearish from 110.59, or the market is bearish from 110.59. So it suggests we can go lower. If this level does not hold, and we try to push upwards, and this gets taken out, we'll probably head a bit higher, something like 112.03. And then I think from here, people might look to build short positions again with stops just above here. Pound versus the USD. So I still haven't had time to talk with my lovely colleagues here, or the guys here at ATFX. You see, what happens here is that I'm based in London, and in London, most people are against Brexit. And it's really important, I think, to sort of sample what people outside of London think. And that's what I'm going to try to do today. I'm going to try to speak with some of the guys that work for ATFX that I know live outside of London to sort of get an understanding what they think is going to happen. Because, well, not what they think is going to happen, but what they think will happen if we have a referendum or a general election. Because I think the following: there's going to be a delay of Brexit. Okay, that's going to be delayed until January 31st. That's what I think. And then, because of that, the next natural step for Boris Johnson, but as well for the opposition, is to get a general election, because both of them want power. Obviously, the English community is fragmented. We need to remember that. The English community, when they voted on Brexit, it was like very, very razor thin margin that they won with. And that's why the MPs as well are fragmented as well. But hopefully, after these 3 years of what we've seen, people are either going to be more pro Brexit or more against Brexit. So then maybe it won't be that fragmented. In either case, I think a general election is probably what's going to happen. And that's what I want to know, what people outside of London think, or how they're probably going to vote. Because if the opposition wins, I think it's going to be quite clear that we're probably going to have a second referendum. If the opposition does not win, then most likely we'll have Brexit, and probably even hard Brexit. So I need to figure that out exactly. The way the market is reacting, though, bouncing back upwards here, I guess is starting to price in some sort of no deal, some sort of a deal Brexit, or I think that's what it looks like this, because if it was going for a no deal Brexit, then I think we'll be trading much more lower. And again, I need to figure that out. I haven't had time to speak with people yet. But I think here in general, I mean, if you look at how the bookmakers are sort of positioning themselves, so how it looks on the bookies, again, they're voting for we will have a second referendum, or betting on a second referendum, and that the second referendum is going to be for Remain. If that's the case, then obviously this was a important low, and we're probably going to head upwards. But let's be realistic here. Have you seen what the opposition Labour Party is trying to do? They're trying to be with and against Brexit. It's a bit confusing, I think, altogether. And we'll see what happens. But I reckon that, if anything, it's going to be maybe slightly more volatile. But my gut feeling tells me, at least in the short term, people will continue to support the pound, and people will continue to price out the no-deal Brexit. And we could potentially head higher. But technically, it just still tells us that up here we should look to short sell maybe around 124.73, somewhere up here, and then just being bearish below 127.86. So I'm gonna stick with that from the technicals, and I think if we look at this realistically, things can turn a bit crazy anyway. So I think that's probably going to sort of weigh on the pound, but we'll see. Here's the dollar versus the Japanese yen. So the dollar versus the Japanese yen, because we got some good some US and China speaking again, and I think there's just news out here that that China is going to exempt 16 American products from additional tariffs, and stock markets, they're very close to their all-time highs, and there's some research floating around there that the world economy and world PMI is going to tick up higher. Now, what happens here, as we might remember, is that interest rates in the U.S. were at very elevated levels. They plummeted from about 3% or so down to about 1.5%. That's a 50% drop in interest rates, U.S. government bond yields, right? So that is an indication, really, that it's becoming easier to deal with sort of credit, and people that have debt are having an easier time. And that tends to spur economic activity. And if you look at things like that, it does suggest that the PMIs will increase, but most likely it will still be not happening right now. It will probably happen maybe March, April next year, potentially by the end of the year. That's what some people have been saying, to develop these different models. And that itself should push stock markets, and could also suggest that we're not going to have a recession this time around. And that is sort of influencing things. However, I still think in general that we have more tariffs kicking in soon. We already have ones kicking in September, and we're probably gonna have more things kicking in soon. So just because they're talking and accepting some products, I don't think it's gonna change things in a major way. And if you looked at the US data, it was quite bad. Like the ISM indicator, the market PMI as well has been bad. So I think in general the yen will strengthen more, and I think we're just having one of these very strong corrections that we've seen in the past. So I still lean towards being bearish, but obviously right now technically, if you look at this in from a 4-hour time frame, the trend is bullish above 106.59, and I think this could, when I look at it now, I mean this could potentially, if we sort of be a bit creative, be viewed as some sort of a rectangle. If we take the base, which we can do like that, I'm literally ignoring this, that's how I figured that out. Then we still have a bit more to go to maybe 108.50. If we take a slightly less aggressive target, we still have a bit more to go, maybe to 108.20. So I still think we can go a little bit higher, but then I think as we start to reach something like these levels up here, not necessarily this one level like specifically, but somewhere up here, I think we start to get some sort of negative price action. Risk reward ratio wise, we actually already corrected quite a bit. The next sort of fib level is up here around 108.28. So I think we could maybe go a little bit higher, and then we'll see what happens. But I think if anything, up here, I think the market's going to start to react. So the market's probably going to try to roll over. But for now, at least, I'm going to insist on just being short-term bullish. I wouldn't buy this myself, by the way. But the trend is short-term bullish, and I think we might go up like that. And then we'll see if the market from these levels wants to do something like that. Okay. Moving along here, let's focus on US oil. So this is US oil, and US oil was stuck within this big triangle. And for anyone that doesn't know what US oil is, it's West Texas crude oil. You have Brent crude oil, which is traded as well, but this is West Texas crude oil. So you might remember this was stuck in a big triangle, and the market, being capped by this trend line. The market is now on the other side of that trend line, and if we take the difference between this spot here and this level here, actually should be like this, because that's the triangle we're dealing with, and then you put it like that, and that gives you your target. So that suggests we can go to 68.31. Again, we need to be realistic. What's gonna trigger this? I'm not really sure, unless we're having some deal between US and China around the corner, and the world is just going to become a much better place. Then I'm not really sure exactly what's going to drive it upwards, but the price itself is hinting we can go up. And then we have this, which is 60.97, which is that target there that could potentially act as a better target. So we talked about potentially turning bullish at 57.45 to break to that level, and I don't have turned bearish on that move. That break happened when I was away on Friday, it looks like. No, on Monday. And I think going forward here, maybe we missed this out, but I think if we do go down to 66, which is very likely we will, then I think people might look to get long again. In the short term, it's not difficult to see that we're dealing with a short-term uptrend as you're creating these higher and higher lows, and then you have the big structure, which is looking interesting. All right, this is a price of gold, and gold on the weekly has been hinting about profit taking. Already on the week of August 26th, you had that big reversal, not big, but you got that reversal candle, followed by another reversal candle here on the week of September 2nd. The market is now, at least if you would just focus on the weekly, telling us that it wants to correct, right? We can all see that. And fib from this low to this high gives you these 3 fibs. And then if we just flip to a daily chart, you can see these levels here. So you can see that the price just closed below these levels yesterday. I do suspect gold will continue to depreciate, and you got all these different fibs. I think the 50 fib could be something, but you see this is a high here, and this is the prior breakup point. That would be 1459 or 1449, And I think realistically here we can go down to these levels and then from here bottom out. As for the longer term outlook, it still remains the same. So you still have that massive head and shoulders with a head here. This is your double right shoulder, and then I guess we need to pick a left, which will be this one here, left shoulder, and that gives you target 1,700. You also have the ascending triangle, which is my favorite pair or favorite pattern, which is this one here, and this one still has an unmet target of 1,600. So I still think we can go up a bit more. So we still have that target, and then again, sort of let's sort of try to be so have a sober look on what's going on here in the market. And I think again, we're not out of the woods. Definitely interest rates and all of that creates a big massive stimulus, but I still think realistically things are gonna be a bit difficult, and I think what could happen eventually is that you'll have weaker labor market, unemployment going down a bit. Initial jobless claims is really what you want to keep your eyes on and see what happens eventually with that. And I think realistically we'll revisit 1,600, or we will visit 1,600, maybe up higher again. But the way this is looking right now, it looks like it wants to head a little bit lower. At the same time, you have your dollar yen going upwards. And again, what's really interesting is that you have some really bearish people with sort of 100,000 followers that have been, they do like TV series, like online and stuff, and they call it the Netflix of finance, and they even created this special series, like recession series, to give people warnings about recession coming up. And now the same person is neutral, which is fine. You know, it's perfectly fine to be neutral, but it's just the timing, which is interesting. You know, when the market is going lower and at lows, you know, people get all very bearish. And then when we start to hit the highs here, people getting neutral to bullish again. That's a big warning sign that maybe, you know, something's going on. Because most of the time you should be very bearish up here. But the thing is when the market clearly goes upwards, there's such a strong difference to your market view and price action, and people can't reconcile this. I mean, even myself, I am a victim to it as well, changing my bias. Sometimes I get influenced by other people, so I do try to limit what I read online. And I think at the end of the day, I just go with the charts many times. So trying to understand the charts and go with the charts and see proven otherwise. Because the situation with dollar yen, yes, going upwards, and yes, this one actually I shorted, and I got stopped out when the market moved upwards here. So I got out of that, and I know when I need to step to the side, and this exactly when it was time to leave this market. And you can see how the market moved upwards since then, and that's really important. And right now the trend's bullish, so going short here immediately as soon as we start to touch this trend line in this sell zone, it's not a good idea. But if we start to go up there and we start to see sort of signs of reversal, like here for example, and then it tumble lower, then that's what you're looking for. As for the German DAX, look at this. This is a inverse head and shoulders. You got yourself a left, right shoulder, and your head. We had the break here. I said you could buy on the break before the break happened, and then I said as well you can also buy the dip. We're at that profit target area. I think people again a bit bullish. This is a good time to book 100% of that position, and the market is now could easily go a little bit higher. And you're just looking at gold, it can go down a bit more. Looking at dollar yen, it can go up a little bit more. So here realistically, if that continues to influence things, this might go up a bit higher as well. So I think here, again, I would book profits here, and then I guess you're really sort of bullish. I guess keep it for another day or so. But I think up here, I think it's the time to book profits. Now looking at this today, what's sort of the next step here for this market? I think we can lower the trend funding level to the breakout point, which was here. And I think we can take Fibonacci from several points. So we're going to take it from down here. I'm going to take it from here. And then we're going to do final one from here. The idea here is that you want to see where things overlap a lot. So you have these overlaps here, you got 2 overlaps here, and you got, I think, 3 overlaps around here, and then you got 2 overlaps here. So this is where we should be looking at. Okay, now get rid of all of this. So this will be the trend defining level. And then just looking at this with our own eyes, yeah, I think probably down here, somewhere with no support and resistance. Just looking for support and resistance. Well, there's not a well-defined low here anywhere. This is the last okay low. So I think maybe let it go down to 12,755, and then from these levels potentially look to rebuild something. And if you happen to be very bearish, then look for a reversal up here. S&P 500. Congratulations if you were sort of brave enough to buy on the ideas we shared down here. The ideas down here was to buy and for this to go upwards. Purely technical at that point. We are very close to the prior high. It doesn't mean that it can't continue to go upwards, but realistically, you're still going to start to see some profit taking here. German DAX is up quite a lot today, but it's not being mirrored by the S&P. It's not being mirrored by any of the US stock markets. I think people are very hesitant to buy here. I think realistically we can go a little bit higher, but this is the spot to book profits here. And I think if we do slip all the way down to something like 29.11, then I think from here people are probably going to be buying. And I think stop loss orders are going to kick in at 28.50 down here. And I think that's pretty much it. I think we covered pretty much all the markets. Let's see if you guys have any questions. So we have Marvin here. Good morning to you, sir. And we have Roger as well. So Marvin says, good morning. I hope you all had a good time away from the office. Yeah, really good time. Thanks. Definitely recommend it for you, Malta, if you haven't been there. Some really nice islands you can check out. The beaches are really good and it's really accessible with boat. And it's just lovely jumping out from the boat into the sea in this clear blue water. And prices and everything is very reasonable as well. So you can have a good time over there. We have Roger saying, good morning. Hope you had a nice break. Metals turned around while you were away. Still looking up or starting to look lower and shorted. And then we have Ashu as well talking about, please give an update on Aussie dollar Swissy. And then I got a question here, if you can trade options in London. So the markets, so let's begin with a simple question here. So the options you can trade, like all trading in general, is online nowadays. So yeah, you can trade options in London. But most people, when they want to trade, they trade options on the American exchanges. Because when you trade options, it's all about liquidity. Because if you have a lot of people trading at the same place, the spreads are narrower, and with tighter spreads, you can get, it's cheaper to trade. So most people trade on the American exchanges, but there are definitely obviously options in London as well. There must be at least for some of the metals and things that are traded here in the UK and in London. But I think it's mostly sort of specialized companies that have their own pricing in London instead of the US. But otherwise, US, like the CME and these places, you can trade options. Obviously, a lot of CFD brokers offer options, but there's a difference between options and options. You have what we call binary options, which I recommend you not to get involved with. In fact, they've been banned in many places in Europe. In fact, I think they've been banned in all of Europe. And then you have real options. You can do that as well, but I guess you buy a book about it. That's easiest, and sort of read up about it. It does require quite a lot of money, and it's not necessarily easier, I think. You can make a lot of money, but you can also lose a lot of money. It's like with everything else. I know quite a bit of options. I trade options myself, like real options, but I always prefer the risk-reward ratio of the spot market, because with an option you can say, you know, for example, if you really want to hedge against the no-deal Brexit, if you think no-deal Brexit is going to happen, you can probably just buy like an option, you know, for maybe GBP USD to trade maybe at 110 within 1 year. And then even if the market goes up to 150, if by the end of next year, well, we start to go down here, if we're around 110 or below it, and say 9 months from now, you still be making money. But the fact that the market can go all the way up before heading lower, it's like an insurance policy, and insurance in general is quite expensive. And it's the same thing here. So you can be right about the move, but you also need to be right about the actual trend. Now about metals, I was looking at metals myself as well. I was looking at palladium. So this is palladium, and this is palladium on I used to CFD palladium. And what I do like about palladium, I think you have platinum as well, trading upwards. But what I like with palladium is that it has, at least on this chart, what looks to be like an ascending triangle pattern. And it does suggest that if we take out 1,605, that we could potentially head upwards. So that's something to keep an eye on. But this is the actual December contract in palladium, which is what a lot of people trade. And here it does look a bit different. This is the actual December contract, and it sort of looks the same, but still not. I guess here, if we take out the July 8th high at the same level as before, actually, so about 1,600, then that could be interesting. Obviously, a lot of people are all about silver, and silver by itself, I find this a bit difficult, really, technically. I don't really know exactly what's going to happen here next. I have a friend of mine that trades silver, and he tells me, so in gold, I know pretty much. I know gold very well, and we have all these different patterns, right? So what he suggested is that when you get a buy signal in gold, you buy silver. So that could be something. So let's see what happens when gold goes down a little bit lower. And if it sort of bottoms out where I expect it to bottom out, and then maybe at that time one can potentially get involved in silver. As for silver by itself, just fib wise, if we take fib from, you got a low here and low here. So if we take fib from low to high, we're pretty much at that third fib. We're at the 50% correction now, but we trade below that third fib. So if it's a genuine bullish trend, I guess it should start to get support where we are. I got a question about, I think it was Aussie dollar versus the Swissy as well. Yeah, Aussie dollar Swissy. So Aussie dollar Swissy, I think, let me check. So this is Aussie dollar Swissy, and Aussie dollar Swissy is really, really bullish, of course, because suddenly everybody thinks that things are good in China suddenly, and everybody's just buying about a bunch of Aussie dollars. Yes, the Aussie dollars have quite a lot against many different currencies. The Swissy itself is down against a few currencies as well. Now I think here you could have quite a, I think most Aussie dollar pairs can go up slightly higher. So I wouldn't be buying here, shorting here. But I think maybe around 69 or something like that. So slightly upwards, maybe 68.50. From these levels, I think realistically should be doing something like that. And this as well. Let's see if this makes sense. So this is a triangle. That's quite interesting. We actually hit that spot on. We hit that target here. If we use that, because you can always take the base. If you take the base, you always get an aggressive target. But when you start to take the base and you start to target the base, it's unlikely going to hit your target. But this one actually was spot on here. Let's be realistic here. If things work out in the world, then this is just going to continue to go straight up. If things did not work out in the world, this is going to go all the way back down again. And I think that's sort of where I'm leaning. As you know, I'm bearish on the world economy. And if it doesn't happen, I think still might go up a bit, and then maybe go down a bit, maybe down to something like 66.72. So that's what I will be looking at, maybe up and then down here. As always, you need to make sure you don't risk too much money. I think I saw this interview actually. This guy called Mark Ritchie, the second, or the first. Sorry, there's two guys. Mark Ritchie, the first, which is the dad, and then you got Mark Ritchie, the second. I think it was. He's the son. Now, Mark Ritchie, the first, he's featured in Jack Schwager's book, and he wrote a series of a few books, Market Wizards. That's what they're called, and I saw this interview, and what's quite interesting is that this gentleman, he must be like 75 or something, 70 at least. He looks quite old. And he was written, these books, the Jack Schwager books, were written in the 90s or something. So he's definitely been around for some time. And what he said is that a lot of people misunderstand sort of the idea of how much to risk per trade, and in essence risk too much per trade. Because he sort of says is that if you risk too much, put too much risk per trade, what's going to happen is that like every system is going to have a bad period. Like everybody that trades loses money at one point. The thing is though, if you risk with too much, put too much risk per trade, what's going to happen is that you're not going to be around for the good times, you know, and that's the problem. If you take too much risk per trade, you're going to be around for longer, and then eventually your system kicks in, because if you trade it long enough, you know that there are times where whatever you put on, you're losing money, right? Whatever you do, you lose money. However, there's also times when whatever you do, you just make money. And I've been there where literally week after week. So I met my wife when I was working at another broker, and I was trading my own account at that time as well. I was an analyst as well. So we were, I don't think we were engaged. Yeah, I think we were engaged by the time. Yes, we were engaged by the time. And so I was like, oh, honey, look, I just made X amount of £1,000 this week. And she's like, yeah, you need to take the money out, you know, because, you know, it's good money. You might lose it. And I'm like, no, I'm going to continue to trade. And then literally the week after, I was like, look, I just made so much more money today. And I was sitting next to a guy as well. He used to be doing sales where I was working at that time. And he was like stunned. And I literally, for 4 or 5 weeks, literally, it was just money. And I think in a period of a few months or so, I did more than, I think, about 100% or something like that at one point, which is crazy. And you have that as well. So you have both the bad and the bad. So obviously, why am I still trading after so many years? And how can I still do that? Just because I don't risk too much with trade. So even if, you know, I'm doing badly and I can do bad for a year or so, I still have money. So when things go well, I do very, very well. Like in 2017, I made about 127% return. In 2018, I made about 40% return. This year, I'm down with 22. So you see what we're dealing with here? When I lose a little. When I make money, I make a lot of money. And that's what Mark Ritchie was saying as well. So you need to be careful with the risk. And when it comes down to set up like Aussie dollar Swissy, again, you need to be careful with the risk. If it doesn't work out, you know, you don't want to lose too much. And if it does work out, then hopefully we'll make some good money. And all of the setups I share with you have that within them. So all the different setups have that risk reward ratio to our favor. And if they don't, you need to say, I mean, they all have anyway, but and that's really important, I think, at least when you're doing trading like this. Sometimes, of course, when you do short-term trading, you can look for different, like a more one-to-one. So if you're doing like intraday stuff, if you're trying to hold a position on the 5-minute chart and you're looking for risk reward ratio 2 times your money, then it's not necessarily going to be that easy to trade. The 5-minute chart anyway is not very easy to trade, so I don't trade that. But you need to be more flexible with the risk reward ratio in general when you trade short term. Okay, I think we're going to wrap things up. I want to thank all you guys for all your questions. It was good questions today, and it was nice to answer them. It was also nice to cover the markets for you guys as well. Now, don't forget to click up here on the page, and then just click on the like button. 3 of you guys already done that already, so please click on it again. Not again, you can actually only click on it once actually, but just click on it, and it would be awesome. So you click on here, share, and you can share the link if you want to, or you can share on Facebook or whatever. It's really important because we're gonna be, I want to do stuff that people like, right? So if you share, I can see that it's watched and stuff like that, and then just encourage me to do more of it. Okay, we're gonna log off. I see UK Kenny here. Thanks so much for joining me this morning, and I hope you have a great day. And everybody else that is watching this or the recording. Thanks so much, and see you guys tomorrow, same time here at investingcube.com. Thank you, and bye-bye.